Hey, Dan Passarelli here. Well, the banks and airlines continue announcing earnings during this week. They're the ones that are going to help give us some indication as to what's going on with the economy and what to expect throughout the rest of earnings season, and probably give a fair amount of guidance to the overall market, the S&P 500, going forward throughout the rest of this quarter. So kind of a big deal. Now, I want to focus in on Delta Airlines, DAL. They already had earnings announced. You can see right here on this chart that they beat earnings pretty good by about 18 cents. That came out on the 13th. Leading up to there, we saw a pretty big strong move, like a really strong move, bunch of green candles in a row, and we had a pullback since then, which turned out to be a green candle. It gapped significantly lower, but ended up trading higher from that open. And today we had what is called a hammer candle. And you can see that right here. And why is it called a hammer candle? Because guess what? It kind of looks like a hammer, right? Now, traditionally, a hammer tends to follow a downturn and can be a sign of capitulation, which is like, the stock just gets sold off so hard that everybody just gives up and says, okay, I'm going to sell my shares, and that's when the value buyers swoop in. So it's not necessarily a totally classic hammer, but to me, it might indicate the potential for continued volatility. Now, in all fairness, I will say that I am long a straddle in there at the moment. And and I'm hoping for some of that volatility, but the signs really, truly are there. First of all, there's a gap right here to be filled, and we tend to see those gaps get filled. There's another gap right here to be filled. Tomorrow, if this does act like a hammer candle, we would expect movement to the upside, but we always wait for a confirmation candle afterwards. So tomorrow, if we open up, we get a green candle, I would expect to see some movement to the upside and maybe even making some new recent highs. And if we don't, if we get a move lower, I would expect to fill some of these gaps. So where does that leave us? Well, the implied volatility is lower than it's been in the past 6 months. And we might be able to buy it. In fact, the historical volatility is 37.5. And right now you can buy volatility in the 10 days, the 17 days, even the 24 days, for even the 31 days for about a 33 volatility, below historical. And we see a very, very good case for some pretty strong movement in Delta Airlines. So I like it as a straddle candidate. I like it for the straddle I already have on, and considering maybe even buying another one further out in time at this dirt cheap volatility level. This is Dan Passarelli. I hope that helps. Trade smart.